Corrections are some of the most confusing structures in markets. When we talk about Elliott waves, there are different patterns, impulses, motive waves, diagonal structures, corrections. And today we want to take a look at one specific type of a correction that can be really frustrating for a lot of people. It's the zigzag correction. We want to talk about structure on a live chart and also what it does to market sentiment. Let's go. Hello and welcome to another video by MCO. My name is Ben, and on this channel we take a look at charts from an Elliott Wave point of view. Today we want to take a look at a structure which is a zigzag correction. It's part of the corrective structure library, you could say, in Elliott Wave, and it is a very common type that you find in markets, a very common market structure, a correction which corrects the trend. So it's a counter trend move. We want to take a look at the concept of what a zigzag correction is, and then we will also take a look at a live chart. So we will go straight into the charts. What I want to show you first is like the theoretical concept of a zigzag correction. We go into our members area, and I just want to show you here this this theoretical concept of a zigzag correction. Now, there are different types of corrections, and I'm not going to talk about what's the difference between a motive wave and a correction. We did that in previous videos, so I will link you a video here. You will see it somewhere, probably in the top right corner. I'll send you a link to a video, or I share that link for a video that explains the difference between what is a motive wave and what is actually a correction. And zigzags are part of the corrective structure, the set of corrective structures in Elliott Wave, basically. And this here is the so-called Fibonacci ratio overview. But really what I want to talk about today is the concept of a zigzag and what makes it up, what is a zigzag correction. So first of all, whenever you get a trend, let's imagine we have an uptrend, then at some point this uptrend will need to be corrected. So this works the other way around as well, but just to keep it simple, I want to share with you the concept in an uptrend. So let's assume we have an uptrend, the price is going up, and it's going up in 5 waves. 5 waves typically indicate the trend. Again, I recommend you watch the previous tutorial as well. Because it indicates the trend, after a 5-wave move up, we know that typically a correction should start. And markets can be corrected in different ways. And one very common way is through a zigzag correction. And the name obviously tells you why, because it's a zigzag. So you could say it like that. So we've got 5 waves down. There are 3 waves overall. And the first wave, which is labeled the A wave, is a 5-wave move. Then this 5-wave move, which is part of a larger 3-wave move, this is the correction. I will show you a live chart. This gets corrected again internally. And this would be an internal B wave. And then we get a C wave down. So first thing that you need to understand is in a zigzag, the subwave structure is a 5-3-5 structure. So always, okay? So the A wave is always a 5-wave move. That can be an impulse, and that can be a diagonal pattern, a so-called leading diagonal. What are these? Not topic of today's tutorial. We talked about impulses already in another video. Then the B wave itself can be a zigzag correction. It can be a flat correction. It could even be a triangle. B waves can take various forms. So it's very important to understand this could be also a zigzag correction. For example, sometimes it's a so-called flat correction that can happen, or it is a triangle. Sometimes it's even a more complex correction, a WXY structure. That's what we will talk about in future videos as well. And then we will get one more final move in this correction to complete the overall 3-wave structure. And that's an ABC structure. And that should then complete the overall correction of the uptrend. Okay, and the trend should continue into the previous direction, which would be up. Important is just initially that you recognize it's a so-called 5-3-5 structure. The A wave is therefore typically quite sharp. So that's very common in a zigzag because the A wave can be an impulse. It can be extremely sharp. Then the B wave would typically be just a corrective bounce. it normally doesn't overshoot. Actually, theoretically, it must not overshoot. We will talk in future videos about flat corrections as well. In a flat correction, the so-called B wave can even overshoot. What does it mean? It means the B wave goes even beyond the beginning of the A wave. But that's not valid, at least theoretically, in a zigzag correction. Now, this is all theory. In practice, when you look at markets and charts, you will find a lot of hybrids between zigzags and flats, especially in today's markets. But when you want to learn Elliott Wave, you need to learn the theory first. And then obviously there's the absolute perfect textbook flat correction. There's the perfect zigzag correction. They are really, in reality, in markets, they are fairly rare, but you'll find a lot of kind of hybrids between them. We'll talk about that in some of the advanced tutorials as well. Then it's important to understand, the B wave is typically quite weak because the 5-wave move makes it clear there should be another move down. That's always when you see a 5-wave move. Initially, it indicates, okay, it's the start of something. A 5-wave move can be a start of something or an end of something. But if you, after an uptrend, if you see a 5-wave move down, it indicates the start of something. So the start of the correction. Okay, 5 waves down, 3 waves up to correct the 5-wave move down, and then another 5-wave move down. That in itself makes a 3-wave pattern. Now, how do we calculate a target for a C wave? Very common is the 61.8 to 161.8 extension range. So you measure the A wave length with the Fibonacci extension tool. I will show you in a minute. And then the C wave target, typically, it's not, even if we go to further extensions, it's not invalidated, but this is a common range. But let me tell you, the 61.8 extension is very rare. Typically, it would be the 100% to 161.8 extension. Anything beyond 161.8 extension, also rather rare, but can definitely happen. Now, this is the theory. How do we know a correction is finished? Well, in the first instance, a break above the wave 4 high would be helpful. Better, a break above the B wave high, especially if that break is in 5 waves, because it indicates again the next move up, which would be another 5-wave pattern, has actually started. Now, again, in that 5-wave pattern, the first wave would also be a 5-wave move, and that needs to break above the B wave high. Let's take a look at a practical example. And I show you the UEC chart. This is at least based on current data, right? This might change, but the UEC chart, uranium energy, suggests currently that we are in a correction, and it could be a so-called zigzag correction. Why is it a good example? Because we have a 5-wave move to the upside from the September low. And this gets corrected. So a 5-wave move up could be a wave 1. So 5 waves up in wave 1, which is part of a larger 5-wave pattern. Ignore for now the orange count, that's an alternative. We want to talk about the white count. This is about a tutorial here, not necessarily a deep dive technical analysis. I just want to use a live chart that we can definitely class as a zigzag correction at the moment, this pullback, and show you how you can deal with it in practice. The advantage is that we can see here as well a potential 5-wave move down in wave A. Now, in reality, you might call that a 3-wave move, but I think you can call it an impulse. So A wave, again, this is where the live chart comes into play, where it's getting challenging. In reality, does it really matter if I can say this is a zigzag or this is a flat correction? It's really, really difficult to say. You don't really need to know the difference necessarily. If you can recognize it, I think it becomes a little easier. You can't always clearly recognize the difference. If this B wave, had this B wave tested the high or even moved above the previous high, it could have easily been classed as a flat correction. But the fact that this is really going down strongly makes it clear it's a zigzag. Why? Because a zigzag is typically a sharp correction. You can class corrections into sideways corrections and sharp corrections. And a wave 2 is often a sharp correction. Now you can see here, this would be a wave 2. After a wave 1 to the upside, that indicates the beginning of an uptrend. The wave 2 often is very sharp because people are not very bullish yet. Obviously, there's no guarantee it will hold, but this is obviously a working thesis. And therefore, a wave 2 is very often a zigzag correction, whereas a wave 4 is more like a sideways correction, would be rather a flat correction. What you normally have in a flat correction is just something that you see the difference. A wave down, high B wave, C wave down, maybe only slightly below the A wave low or even above, and then continue. The zigzag is, let's say, less bullish because it is a sharper correction and it creates typically a lot of fear. I talked about market sentiment in the beginning. It creates a lot of fear. So what's the sentiment we feel in a wave 2? Well, we're bearish typically, right? That's interesting. And we need that sentiment for the price to form a low at some point. Here you can see as well that if we really label that, I can make a case at least for 5 waves in wave 1, 2, 3, 4, 5 in wave A. Whenever I can label something as 5 waves down, it indicates the beginning of a correction. Especially if I can recognize that in the internal structure, because this here looks also fairly clearly like a 5-wave move down internally in wave 1. And then the wave 2 is obviously the corrective rally. It would be an ABC structure. I just showed you that on the theoretical, let's say, theoretical textbook image. Yeah. Oops, didn't want to do that. So here. ABC in wave B. And now we're moving down. What do we say? C wave should have 5 waves. We have a wave 1, we have a wave 2, wave 3. Yeah. Again, I can probably label that slightly differently. You could say, hey, we've got a wave 1, 2, and then another 1, 2, 3, 4, 5. If I really wanted to label the subwave structure. See, this tells me it's probably not finished, this correction, because I can even in the 3rd wave still recognize the 5 waves. So it technically needs this entire correction because I know a C wave should be 5 waves. 1, 2, 3 should now be working on the 4th wave. And then I need one more low in wave 5. Okay, so we could be working on the 4th wave right now. How do I determine, let's say, resistance? So initial resistance in this case, let me just adjust that slightly, would be if I have a thesis that we could get one more low. Either way, I need a break above initial resistance anyway for an indication of a trend reversal. But we can talk about trend reversal tutorials in another video. Let me know if you like that. How do I determine a chart is reversing? But in this case here, if I've got 3 waves down, potentially, I mean, I can always say, was this the 3? You know, this is where we have alternative scenarios. But either way, even if I have a completed wave count, would I rely on it? Not really. I want to see a reversal signal. And that would be a break above initial resistance. And how do I determine that? Well, for a 4th wave, we know, and again, there might be a different tutorial, we know the price should stay below the 50% retracement. Anything above that is too large for a 4. So if we go above that level, it indicates, okay, it's maybe more than a 4th wave. So I've got a wave 1 down, a wave 2 up, a wave 3 down. This could be a 4 and one more low in 5. So $5.92. Only if it gets above that level, the low is in. I could even say wave 4 might have topped and wave 5 is in. But is it reliable? Not until I get a break above resistance. That would be my first signal. Basically, the trend is down from the moment that correction started on this time frame. If I just look at the correction itself, and I need a signal like another 5-wave move up into the other direction to indicate the low is actually in. Yeah, that's how I would approach this. And then we talked about Fibonacci retracement. So I showed you retracements ideally rather weak in a B wave, in a zigzag. So typically up to the 78.6 retracement. Yeah, this is where it got rejected. At the 78.6 retracement, slight wick above it, but it's actually a perfect zigzag because the price moved up in an ABC pattern, which also looks like a zigzag itself, actually. Yeah, probably. Get a bit deep, that B wave. Maybe it was a flat, but that is not so important. It is important that in this B wave, the price does not break and sustain above the 78.6 retracement, which it didn't. The sellers turned up at this sentiment level, 78.6 retracement. Targets to the downside looks to me quite extended. We'll take a look at that. How do we determine that? We take the trend-based extension tool. I measure the entire length of the A wave. Then I go to the high of the B wave. And typical target is already broken. So that would mean, okay, I have to be on the side of caution. But that's not a surprise because in this wave 2 correction, we're already at the 78.6 retracement, which already indicates it's a deep correction, okay? And then in addition to that, the Fibonacci extensions, we are beyond the 161.8 extension. But that's where we use these together with a wave count. I mean, if we're coming down and I see, look, we haven't even seen a wave 4 and 5, and we're already at the 161.8 extension, I'm assuming we get an extended C wave. So yeah, but that is basically, in short, what you need to know about zigzags. We talked about the internal structure. We talked about how a B wave should look like in a zigzag, talked about a live chart, talked about Fibonacci extension targets, retracement targets, and yeah, also what it would indicate, how a trend change would play out. So that is everything you need to know for now. Hope you liked the update. Let me know if you're interested in further updates, further tutorials. Make sure you watch the previous ones as well. And yeah, make sure that you subscribe to the channel. Thank you very much. Bye-bye.